So yesterday we started discussing about return of income. వెనక లైట్ లేదండి, అక్కడ లైట్ లేదు, ఆ లైట్ కూడా వేయండి. So return of income, sir. So under 139 subsection 1, there is mandatory. Certain people has to file return of income mandatorily. Who are those? First one, company, firm, LLP, irrespective of their turnovers and total incomes, they have to file return of income. Then other SSEs. Other SSEs, if gross total income exceeds a basic exemption limit, okay, so 139 subsection 1 is about filing of return of income. Company, firm, including LLP, has to file mandatorily. Other SSEs, if gross total income exceeds basic exemption limit. Okay, so how do we should calculate gross total income here? Before giving 54 series exemption also we should calculate gross total income. If that exceeds basic exemption limit, then return of income has to be filed mandatorily. Then if both these cases SSE is not there, but SSE is a resident and ordinary resident, he is a beneficial owner of any asset located outside India, or he is acting as a beneficiary for any asset which is located outside India, then also he should file return of income mandatorily. Then persons entered into special transactions, separate special transactions. What are those? First one, the aggregate of deposits made are greater than 1 crore in current account. Aggregate foreign travel expenditure is greater than 2 lakhs. Electricity expenditure is greater than 1 lakh. Business turnover is greater than 60 lakhs. Provision more than 10 lakhs. And then the aggregate of TDS or TCS deducted in the previous year is more than 25,000. Savings account deposits are more than 50 lakhs. Then other entities like trust. Before giving section 11 and 12 exemptions, if their total income exceeds basic exemption limit. Political party, gross total income exceeds basic exemption limit before giving exemption under section 13A. Research associations, news agencies and other institutions like, okay, their total income exceeds basic exemption limit before giving exemptions under section 10. And then universities, colleges, associations, business trusts, investment funds, these has to file return mandatorily irrespective of their total income. Then what is the due date? Sir, for companies, and then SSEs to whom tax audit is applicable, and even to a partner of a firm, if tax audit is applicable to the partnership firm, then the due date is 31st October of assessment year. If transfer pricing provisions also applicable, then 30th November of assessment year. If it doesn't fits into any of these two cases, then 31st July of assessment year. Then what happens if return is not filed? 234A interest will come, 234F fees will come. How much, sir? Up to 5 lakhs na 1,000, above 5 lakhs na it is like 5,000. If return of income is not filed, then assessment will be processed under section 144. Sir, if no return na, then they have to assess with the information available with them only, which is called best judgment assessment. Then mode of furnishing of return. How the return has to be furnished, sir? It could be furnished in paper form, and then electronically with digital signature, and then file electronically and send the physical ITRV physically, okay, physically sign it and send. Return filing and online only, but the acknowledgement copy will take print and sign it physically and send it physically. Third one, sir, fourth one, you file return electronically only, and verification also done through electronically only through a OTP or something. Okay, then who has to file in which mode? If it is companies, political parties, firm, LLPs, individual HUF to whom tax audit is applicable, they have to file e-return plus DSC also. Then if he is a senior citizen, age greater than or equal to 80, and he is either filing a ITR 1 or ITR 4, then he can file in any mode, including paper mode. Others now they can file in any mode other than paper mode. Then 26 years. So 26 years is a statement which reflects yearly basis. It consists of tax paid details such as like advance tax, self-assessment tax, and regular assessment related tax any paid, it will be reflected there. TDS and TCS deducted, refunds if any issued, turnover as per GSTR 3B, and details of specified financial transactions. Then section 139 subsection 1C, it is about exemption from filing return of income. Sir, when a person is individual, resident, and age greater than or equal to 75 years, and he should have only pension income and interest income. Okay, other than these two, he should not have any other income, pension income and interest income, and those two also should be creating into a same bank account. Okay, specified same bank account, and he files a declaration, and the banker has been deducting TDS under section 194P. Sir, under 194P, they'll calculate his tax liability, this senior citizen tax liability. Whatever will be his tax liability, that amount will be deducted as TDS. Since the applicable tax was already paid to government in the form of TDS under section 194P, he will be exempted from filing return of income. Then we discussed about section 139 subsection 3, which is about loss return. Return of income has to be filed by due date under section 139 subsection 1 to carry forward the following losses. Sir, these losses can be carried forwarded only when the return is filed. What are those? Business loss, specified business loss, speculative loss, capital loss, or loss from activity of owning and maintaining race horses or horses for race. Okay. Then which can be carried forwarded even though return is not filed? House property loss and unabsorbed depreciation can be carried forwarded even though return is not filed within the due date. However, sir, for belated return or for delay in filing return, only carry forward option will be taken away. Set off option will be there. Okay, let's say you filed after due date. Still, any loss is there, now you can set off with other heads in the same year. No problem. But the losses cannot be carried forwarded to the next years if return is not filed within due date unless house property loss and unabsorbed depreciation. Then, however, sir, if due to some genuine reason, genuine cause, you cannot file the return in time, then you can apply for condonation of delay. Okay, who are the authorities that can condone the delay? It depends on how much loss you have reported. If the loss is up to 1 crore, the condonation power is with Principal Commissioner of Income Tax or Commissioner of Income Tax. If the loss is between 1 crore to 3 crores, then Chief Commissioner of Income Tax. If it is above 3 crores, Principal Chief Commissioner of Income Tax. Then 139 subsection 4, section 139 subsection 4, it is about belated return. Sir, what is called belated return? Yes. So when we'll wish belated happy birthday? Once the birthday is over, then next day or after 2 days, if you came to know that his birthday already completed, then you'll wish belated happy birthday. Same here also. Belated return. Birthday already went on 31st October here. Return filing date. Afterwards, if you are filing return, then that is called as belated return. Just like as birthday wish, sir. Sir, today is his birthday, but you don't know and you cannot wish. Then afterwards, 1 day, 2 days, you came to know and wish belated happy birthday, fine. 1 week, up to 1 month also fine. 6 months completed. Then you came and saying like, belated happy birthday. So then it will be like what? Senseless, right? Same way, belated return also has to be filed within a limit, within a time limit. You cannot file like after 1 year, 2 years, 3 years and can say simply belated return. So it has a time limit also. First, belated return means return filed after due date. Then it is called as belated return. And such belated return has time limit. What is the time limit? If return of income is filed after due date, then it is belated return. Belated return has to be filed by earlier of 3 months prior to end of relevant assessment year or before completion of assessment. Okay, sir, what is the applicable assessment year for your exams? First tell, previous year applicable. For you the exams you write, what is the previous year applicable? Previous year 25, 26. Assessment year 26, 27. That means first you need to find out for previous year 25, 26. First tell me, sir, assuming audit is applicable. What is the return filing date, sir, for assessment year 26-27? 31st October. Assessment year, year you should tell, na? 31st October 26 is the date of filing the return, due date of filing the return. Okay. Then, what is the time limit for filing belated return, sir? It is 3 months prior to end of relevant assessment year. So, this is the relevant assessment year. By when it ends? 31st March? Year also important. If you say just 31st March, now it is not enough. 31st March 2027. For that 3 months prior means 31st December 2026. So 31st December 2026. So 3 months prior to end of relevant assessment year or before completion of assessment, whichever is earlier. Sir, before 31st December only, if assessment was taken and completed, then that itself will be the last day for filing the belated return. If assessment was not initiated, even though initiated, it is not yet completed, then you have time till 31st December of 2026 for filing belated return. 3 months before the completion of relevant assessment year. Sir, actually, with respect to this, in Finance Act 2026 also there is an amendment. 2026. But 2026 Finance Act is not applicable for us. For us, which act is applicable? Finance Act 2025 only. Okay, in the recent budget, there is an amendment with respect to this. But that is not applicable to June 26 exams as well as to December 2026 exams. So, whatever the provision we are discussing is like final only. Okay, don't get confused if someone or some post you see later. Okay. So, what is the point, sir? You have to file belated return by when? 3 months prior to completion of relevant assessment year. For us, relevant assessment year is 26-27. Then by when it has to be filed? 31st December 2026. Okay, this is the maximum date. If before itself assessment completed, let's say by 30th November only assessment completed, then 30th November 2026 itself is the last date for filing belated return. Understand? Okay. Sir, able to understand, right? Then we are moving on to revised return. So what is called revised return, sir? You already filed a return, and in such return there is an error, omission or mistake, and you wanted to rectify it. Okay, then you will go for what? Revising the return already filed. So which return you can revise? A normal return filed under 139 subsection 1 can be revised. A loss return filed under 139 subsection 3 can be revised. A belated return filed under 139 subsection 4 can be revised. A revised return filed under 139 subsection 5 also can be revised once again. Okay, so you filed revised return. Why? Because there is an error, omission or mistake. But afterwards also there is still error, omission. Then still again you can go for what? Revision. So revision can be done any number of times. There is no restriction on revision. Okay, so what returns you can revise, sir? Normal return under 139 subsection 1, loss return under 139 subsection 3, belated return under 139 subsection 4, and even a revised return under 139 subsection 5 also you can revise. If you revise, you can revise it for any number of times. Then, sir, once you did the revision, then the original return is gone only. Whatever the original return you file, then it doesn't have any relevance. It substitutes completely. It substitutes completely. The revised return substitutes completely the original return. Sir, first you filed normal return. Then you filed revised return. Then at the time of assessment, again you got doubt. And you wrote a letter to the assessing officer stating like, sir, I mistakenly filed revised return, sir. I thought in some other way. But original return is only correct, sir. Consider original return only. Like that you prepared a clear letter and given to assessing officer. Is that letter has any validity? No validity, sir. Okay. Revised return will substitute the original return. So assume like the original return deleted and this file was replaced. This file was replaced, sir. In system we'll do now, sir. Okay, if you want to copy the same file again, you will just do replace. So replace, now what happens? The original file will goes. The new file will get updated. Same thing happens even with the revised return. Okay. Sir, then what is the recourse, sir? Sir, what is the recourse, na? If he has to do, if at all he has identified that still there is any error or omission, original written is only correct instead of revised written, then again revise the written and show whatever you have filed in the original written only. Okay, you have any number of times for revision and updation, sir. Okay, and then, sir, let's say you filed written and you have observed some error or omission. Instead of filing revised written, you provided a letter. You provided supporting documents, you made a covering letter, you formally met the commissioner or whoever the applicable officer, okay, you explained the issue, you submitted the documents, everything. But still, it need not be counted as a revised written, and that documents does not have any validity. Okay, so if there is any error or omission, you should not do all those things. What you should do? You should go for revised written only. Okay, if there is any omission or wrong statement in return of income 139(1), 3, 4, 5, then SEC can file revised written. Revised written has to be filed. Okay, time limit, sir, I'll discuss afterwards. Revised written of income can be revised any number of times. This revised written completely substitutes original written. Revised written has to be made as per 139 subsection 5. If a plain letter or a revised statement provided, that does not amount to revision. Okay, revision can be made even after intimation under 143 subsection 1. Sir, at the time of filing return also, we do tax computation. That is called self-assessment. Because we ourselves assessing how much is our tax liability. Assessing nothing but finalizing our tax liability on our own. So that is called what? Self-assessment. First one, at the time of filing return of income. Then, once you filed a return, every return by default will get processed by system. Okay, that is called as what? Provisional assessment under one, or summary assessment under 143 subsection 1. 143 subsection 1. So what will do? System will check for certain irregularities, whether the deductions you claimed are more than the limit given, or whether any losses which you cannot carry forward has been carry forwarded. Such kind of technical issues it will check and give you a 143 subsection 1 intimation. This is first level of assessment. Then afterwards they can go for a regular assessment. By giving notice under 143 subsection 2, they can go for even a regular assessment. If you are not cooperating in regular assessment, then they can go for best judgment assessment under section 144. Okay, even after doing all this, later after 2 years, 3 years, they found out like they did assessment, but still they couldn't find out certain incomes, or certain incomes has been concealed by you, or certain incomes were not reported by you, and which is prejudicial to the interest of revenue. Then they can go for income escaping assessment. Income escaping assessment. So how many assessments are there, sir? First self-assessment, then summary assessment by system, then regular assessment. If regular assessment is not possible, then they'll go for best judgment assessment. After doing all these also, still they came to know that there is still some income has not been reported or not been taxed properly, and which is against to the interest of revenue. I mean, there is a revenue loss to the government. Then they can invoke what? Income escaping assessment. This many assessments are there. Okay. Now what they are saying, revision can be made even after 143 subsection 1 intimation. When you can do revision, sir? Revision can be made even after 143 subsection 1 intimation. I mean, the provisional assessment or the summary assessment is already made by the system, but still afterwards also you can go for what? Revision. No problem. Okay. So what is the time limit for doing revision? Sir, maximum the revision has to be done by 3 months before the completion of relevant assessment year. 3 months before the completion of relevant assessment year. Means what, sir? 31st December of assessment year, nothing but 31st December 2026, or date of completion of assessment, whichever is earlier. Sir, here date of completion of assessment before completion of assessment here assessment means they are referring to 143 subsection 3, the regular assessment or scrutiny assessment, not the 143 subsection 1 intimation and all. Sir, in 143 1 intimation, when it will come? First system will do the summary assessment. If there are any differences, even though no differences also, they'll issue what? 143 subsection 1 intimation. So this is also a closure of assessment. But this assessment is not counted for finding out before completion of assessment. Here assessment means what? Under 143 subsection 3 or 144. That's what they are referring here. Not the summary assessment which will be carried out by default for every return. Understood, sir? Revised return. Okay. Then defective return. Sir, when we can call it as a defective return? Return has been filed, and in the return there are some defects. What are those some defects? Return not filed in a prescribed form. Return not filed in a prescribed form. Sir, what are prescribed forms? Sir, depending on his income, there are ITR 1, ITR 2, ITR 3, ITR 4, ITR 5, ITR 6, ITR 7, like that. So many ITRs are there. But he has chosen a wrong ITR and filed. Then it is called as what? Defective return. Or any annexure statement. Any annexure or statement has to be filled and it was not filled. Then proof of tax payment was not attached. But since it is e-filing, sir, now proof of tax payment you need not to attach. Okay. And then audit report is also not submitted. If any of these are made, then it is called as what? Defective return. Return of income not filed in a prescribed form. Any annexure statement was not filled. And then audit applicable. But the audit report was not submitted. Then in that case it is called as what? Defective return. What AO will do if it is a defective return? He'll intimate the defect to SSE and gives opportunity to rectify within 15 days or extended times. So minimum he'll give 15 days. But if you request that 15 days is not enough, now he can give you extended time also. So SSE has to file what in mail? Well, he has to rectify within the time. Then the return, if SSE fails to rectify within that time, original 15 days or extended time, then the return considered as invalid, void ab initio. I mean, it doesn't even count as you have filed a return. Your return itself will become void ab initio. I mean, from the beginning, it becomes void only. So, it is nothing but in simple, it is assumed as like you didn't file any return at all. Okay. So, what is called defective return, sir? First, okay, proof of tax payment not attached. But is it required now? Since e-filing now, it is not even required to be attached. Then what are other defects? Wrong form selected. Then any annexure statement which has to be filled was not filled. And audit report was not submitted. Then it can be called as defective return. Okay, if it is a defective return, what AO has to do? He has to inform that defect to SSE. Okay, and he has to give 15 days or sometimes more than 15 days also time to get rectify that defect. Okay, if he rectifies that now, then no issues. Otherwise, if he SSE fails to correct the defect within 15 days or extended time, then the return will be considered as invalid, void ab initio. Then PAN number. Who has to apply for PAN? If you are accessible to tax, sir, when you are accessible to tax, when your total income exceeds when total income exceeds basic exemption limit, then you will be accessible to tax. If you are accessible to tax, you have to file return of income. When you have the need to file return of income, first you should apply for what? PAN. By when you have to apply, sir? By 31st May of assessment year. Because by July you have to file return. Okay, by July if you have to file return, by May you have to first apply for PAN. Okay. Then if it is any person carrying business or profession and the total turnover exceeds or likely to exceed 5 lakhs, then also you should apply for PAN. By when, sir? By the end of financial year, nothing but 31st March of previous year, because financial year and previous year are one and the same. So here before the end of financial year, nothing but before the end of previous year. Then Sir, first case is what? You are going to assessable for tax. Nothing but your total income exceeds basic exemption limit and you have the requirement to file return of income. Apply for PAN. By when? 31st May of. Before itself you can apply, no problem. But maximum by 31st May of assessment year. You are carrying some business or profession and your turnover exceeds 5 lakhs or likely to exceed 5 lakhs. Then by the closure of financial year itself you have to apply for PAN. Then third case, sir, you are a resident person and enters into a financial transaction. It could be related to purchase of goods, sale of goods, or purchase of any other property where your aggregately the value of that financial transaction exceeds 2.5 lakhs or equal to 2.5 lakhs. Then such person has to apply for PAN. But if this person is a company, then company has to apply, company director also should apply. If this person, original person is a firm, then firm should apply and even partners also should apply. If it is any other person, that person should apply and even the principal officers also should apply. Okay, sir? By when they have to apply? On or before 31st May of following financial year. Understand, sir? So the transaction entered by company is more than or equal to 2.5 lakhs. Then company should apply, even director of company should apply. If it is firm should apply, partner should apply. If it is any other person, such person should apply and even the principal officers also should apply. By when? 31st May of assessment year. Then, where we should quote PAN number? It's okay, PAN number, sir. See, there are this page is completely about where the PAN has to be quoted or PAN number has to be shown. First one, PAN is mandatory in all returns. In every return you file, PAN number is must. Actually, we need not to file also in e-filing. By default, the PAN number will be there. Okay, then in all challans for payment of tax. Here also actually we need not to fill. By default, it will come. Then in all documents related to specified transactions. So we gonna discuss about what are called specified transactions. Then sale or purchase of motor vehicle except two-wheeler. Except two-wheeler, if you are buying any motor vehicle, then also PAN has to be submitted. If you are opening a current account, opening a demat account or applying for any credit debit card, then also PAN has to be given mandatorily. Sir, once again, all the returns, challan, tax payments, then specified transactions, then fourth one, current account, demat account, then sale purchase of motor vehicle other than two-wheeler, and last one applying for credit and debit cards. Now we are going to discuss about what are specified transactions. When you are making cash payment to hotel or restaurant in excess of 50,000. When you are making cash payment for travel, that also foreign currency, in foreign currency. More than how much, sir? 50,000. When you are purchasing demand drafts from bank or pay orders from bank, you are giving cash and buying what? A demand draft from bank. I mean nothing but you 50,000 cash converted into DD, demand draft or pay orders, which is more than 50,000. Then time deposit. You are making a deposit with timely deposits with bank or NBFC, post office, Nidhi company, which is more than 50,000 or aggregately rupees 5 lakh in a financial year. Sir, in one time you didn't deposit 50,000, but in a year you are deposited 40,000 20 times. You are deposited 40,000. How many times, sir? 20 times. So 40,000 into 20 na 8 lakhs. Okay, which is aggregately more than 5 lakhs. So again, he has to mention his PAN details. Then purchase of prepaid instruments. Sir, what are prepaid instruments? Prepaid instruments na stamp papers. Okay, stamp papers, you know. Okay, stamp papers. Then normal stamps. Post office stamps are also prepaid instruments. Stamp papers also prepaid instruments. Certain vouchers. The normal vouchers and all we buy also called as what? Prepaid instruments. If they are prepaid instruments, you are purchasing cash by using what? Cash, DD, check, and it is more than what? Rupees 50,000. Then also you should quote PAN. Then you are making payment for purchase of mutual funds in excess of 50,000. Making payment for purchase of bonds, debentures of a company or institution in excess of 50,000. Payment made for purchase of bonds from RBI, which is in excess of 50,000. You are making a cash deposit in bank, post office, cooperative society in a day exceeding 50,000. You are entering into a contract for purchase or sale of securities which is more than 1 lakh per transaction, and you are purchasing any unlisted share which is more than or equal to 1 lakh per transaction. You paid life insurance premium more than 50,000, and then purchase and sale of immovable property where the consideration more than 10 lakhs or stamp duty value more than 10 lakhs. Sale purchase of normal good and services in excess of 2 lakhs per transaction. Okay, in all these cases PAN is necessary. Advanced reporting, I'll tell once again, sir. All these cases, first what? PAN is necessary. So what are those, sir? Hotel, restaurants in excess of 50,000. Travel related foreign currency in excess of 50,000. For purchase of DDs and pay orders in cash in excess of 50,000. Time deposit with bank, NBFC, post office and Nidhi companies in excess of 50,000. Purchase of any prepaid instruments. Sir, prepaid instrument, na, you pay money first and you'll get an instrument. But this instrument, if you submit afterwards also, it will be counted as equivalent of money. Sir, what is the purpose of stamp? Postal stamp, sir. Why postal stamps were introduced? You know, can you guess at least why postal stamps used to be there? So simple thing, sir. That time there is no online system and all, and then the office will not be open for every time. So what you can do, if you want to write letters, na, first itself you can buy stamps, and then instead of every time you going and paying money to the money in the post office, you just attach a stamp there, which is equivalent of what? Payment of applicable charges. So instead of now you going to the post office, you can deposit it in any letter box. అర్థమవుతుందా అండి? ఇప్పుడు మామూలుగా అయితే మనం కొరియర్ చేయాలంటే ఏం చేస్తున్నాం? ప్రతిసారి డిటిడిసి ఆఫీస్కి వెళ్ళాలి, ప్రైవేట్ కొరియర్ అనుకున్నా, లేదా అట్లీస్ట్ ఆన్లైన్లో అన్న బుక్ చేసుకోవాలి. అప్పుడు ఆన్లైన్ లేదు, ప్రతిసారి అక్కడికి వెళ్ళలేవు. సో ఏం చేస్తావు? ఫస్ట్ ఇట్ సెల్ఫ్, అండ్ దట్ టైమ్ ద మేజర్ మోడ్ ఆఫ్ కమ్యూనికేషన్ ఈజ్ వాట్? Letters only. So what they will do? First, let's say they plan in a month they gonna write 30 letters. Every letter needed 1 rupee stamp. So first itself you go into the post office, deposit 30 rupees and take 31 rupee stamps. So it is equivalent of what? You already paid applicable fee. Now on the every letter if you attach stamp, na, it is nothing but equivalent of paying applicable charges. Okay, that's why prepaid instrument concept has been introduced. Then payment to mutual funds for units in excess of 50,000. Payment to bonds, debentures of a company or institution in excess of 50,000. Payment to RBI for bonds in excess of 50,000. Cash deposit in excess of 50,000. Then contract for purchase or sale of securities in excess of rupees 1 lakh per transaction. Sale purchase of unlisted share in excess of 1 lakh per transaction. Life insurance premium greater than 50,000. Purchase and sale of immovable property greater than 10 lakhs or stamp duty value greater than 10 lakhs. Sale purchase of good or service greater than 2 lakhs per share. Then if you gonna enter into these kind of transactions, sir, you should report them in advance itself. Okay, advancedly you should report your PAN number if you are going to enter into these kind of transactions. Advanced reporting of PAN. What is this? If you gonna make cash deposit in excess of rupees 20 lakhs or equal to 20 lakhs in a financial year, then prior to 7 days itself update to the bank with your PAN details. And cash withdrawals you gonna make in excess of or equivalent to 20 lakh, or opening of current account or cash credit, sir. This is cash credit, na? It is nothing but cash credit. Opening of cash current account or cash credit account more than 20 lakhs in a financial year. Then in that case, not at the time of transaction you have to submit PAN. Priorly 7 days advance itself you have to update your PAN details. Then section 139AA. Quoting of Aadhaar number. Quote of Aadhaar number. So first, every person is required to quote his Aadhaar number also, where in his application for PAN number, now itself if he is applying for PAN, then in the PAN application itself he has to mention his Aadhaar number. He already has PAN and Aadhaar. Then what? In filing, at the time of filing return of income, in return he has to mention even his Aadhaar number also. Person who has allotted PAN before 1st July 2017, because this Aadhaar requirement has came only in 2017, but you got PAN number before 1st July 2017 only. Then what? You should again link your PAN with Aadhaar. If your PAN is issued before 1st July 2017, that time in PAN application they didn't collected Aadhaar number. So after, so if your PAN is before 1st July 2017, now what you should do? You should link your PAN and Aadhaar by when? 31st March 2022 is the last date. Okay. Otherwise what? Your PAN becomes inoperative. To make it operative, what you should do again? You should pay a fees under 234H, which is 1000 now, which is 1000. So okay, let's say sir, you got PAN before 2017, but then after you didn't used. Okay, let's say your father or mother's PAN you didn't used by then, but now you required or there is a need to use that PAN number also. But since it was not linked with Aadhaar, it became what? Inoperative. Now first you should pay 1000 rupees fees under 234H, your PAN becomes operative, then link your PAN with Aadhaar. Aadhaar need not to be linked or mentioned in certain cases. When you are residing in Assam, Jammu and Kashmir and Meghalaya. Why? Sir, in these three states, the Aadhaar updation is not yet completed. Why? Partially done, not completely. Why? Because now there is so much of havoc regarding the citizenship in these three states. Okay, in Assam, the border states, border countries people might be coming. Okay, the citizenship cannot be decided easily. Jammu and Kashmir also same issues. Meghalaya also same issues. That's why these three states complete Aadhaar issue has not happened. That's why these three states were exempted from that particular rule. And if he is a non-resident, sir, he is a non-resident, sir, he is staying in outside India. How can we expect David Warner or a foreign cricketer just because he is earning in India will have Aadhaar card in India? So they will not have. Just because we kept in Instagram reels and all, it was circulated, you apply for Aadhaar card and all. Okay, but still they don't have what? Aadhaar card. How they can do? That's why non-residents cannot do Aadhaar updations. Then if his age is greater than 80 years, sir, already his age is greater than 80 years, sir, they are not able to walk also. So those people now need not to be taken to the Aadhaar centers and then Aadhaar updation and from Aadhaar again PAN linking. All this process is not required if his age is more than 80 years and then he is not a citizen of India. If he is not even a citizen of India, then Aadhaar itself will not be issued. How can you link Aadhaar? That's why, sir, Aadhaar is not required in the following cases. You are residing in where? Assam, Jammu and Kashmir, Meghalaya. You are a non-resident, age greater than, or non-resident is separate point. Then third point, your age greater than or equal to 80 years at any point during the previous year, or you are not a citizen of India. Then 139B, tax return preparer. Tax return preparer. Specified class of people can file their return of income through tax return preparers. So tax return preparers, these are not CS, first thing. CMAs can be tax return preparers, but not CS. A chartered accountant cannot be tax return preparer, but a cost accountant can be tax return preparer. Sir, this is something, why this tax return preparer concept? Sir, I mean, in general sense, what they are going to tell here is like, if you are enrolled as tax return preparer, you can go to someone and tell, I am authorized to file tax returns for you or on behalf of you, even under income tax, so that you can claim your status that you are a tax return preparer and you can get some business. filing returns and all, or for making tax compliances and all. Other than that, there is no much difference. But understand, sir, no CA will claim as tax return preparer, because by the qualification itself, the society knows that they know tax and they only do mostly tax compliances. So specified class of people can file return through tax return preparers. Who can file tax return through tax return preparers, sir? Other than company. Why not company, sir? Because company already audit applicable. For company already audit applicable. So they cannot come again to the tax return preparer. And any person who has audit under 44AB, if not tax audit under any other act. So these people, company, sir, company also audit applicable mandatorily as per Companies Act. So nothing but simply what they are saying, if audit applicable under this Income Tax Act or any other act, those people cannot file returns through tax return preparers. Other non-audit SSCs can file returns through tax return preparers. So who can be tax return preparer? That was not answered. They answered only who cannot be tax return preparer. Okay, other than people, rest all can be tax return preparers. An individual can act as tax return preparer who is authorized by CBDT, except a chartered accountant cannot be a tax return preparer. A legal practitioner, nothing but a lawyer, cannot be a tax return preparer. An officer of a bank in which SSC has an account, okay, he cannot act as your tax return preparer. Your employee of, okay, for specified class persons or for company, their employee itself cannot act as tax return preparer. Or if it is a firm to which audit applicable, any employee of that firm cannot act as tax return preparer. So if you are a specified class of person, your employee cannot act as your tax return preparer. In general, your CA cannot act as your tax return preparer. Your legal practitioner cannot act as your tax return preparer. Or officer of a scheduled bank in which you have bank account, such officer also cannot act as your tax return preparer. Then verification of return. For in different cases, for different individuals, who has to verify? Sir, individual, who has to verify return? Generally, sir, you need not to put or take much stress also. Easily you can understand and remember this. Individual, he has to sign the return, whether digitally or physically. He is not in India or mentally incapacitated. Who will do, sir? Competent person, nothing but if you have given power of attorney to someone, then such power of attorney. Otherwise, your legal hires, okay, they are gonna verify your return. Nothing but competent person, power of attorney is there, then that power of attorney. If no power of attorney, then the persons who are your legal heirs can do that one, individual. Then HUF, who has to verify? Karta, not in India or mentally incapacitated. Any other adult member of HUF, sir, need not to be co-partner. Any other adult member of HUF. Sir, you know there is a difference between member and HUF. Let's say Navneet started a HUF. In Navneet HUF, Navneet is a co-partner and member of HUF. But when he marries, his wife will become only member. His wife can never become co-partner of his HUF. But his children will become, irrespective of girl child or boy child, they will become co-partners. Okay, but wife, since she came from some other family, she cannot be co-partner in your family. Understand? Okay, but where she will be co-partner? Your wife will be co-partner in her father's family or father's HUF, but not in your HUF. Understand, sir? So here they didn't said like co-partner has to verify. They said like what? Any other adult member can verify. So husband created a HUF. Children are still minors. Okay, but husband not available or mentally incapacitated. Then wife can verify the return on, wife na, nothing but she is another member of HUF and she is an adult member of HUF. She can verify the return. Okay, then partnership firm, managing partner. If no managing partner available, any other adult partner. Firm generally what, sir? Managing partner, not sleeping partners. If no managing partner available, then any other adult partner. LLP, designated partner. If no designated partner available, any other partner. company, managing director. If no managing director, any other director. Company already into liquidation, then liquidator. Company into insolvency process, then such insolvency professional who has been appointed by the court. Management taken over by central and state government, then whoever the officer appointed by central and state government. Sir, when central government will take the control of a company? When a serious fraud is happened, it's a listed company only, but there is a serious fraud happened in that company. Now, all the shareholders' money is at stake. Because of that fraud exposed to the public, the share prices are collapsing like anything. Now, if no action is taken by government, then the public money will be lost. Public money is at stake. So now what? Government has to keep some competent person who can run the business for some time so that shareholders' interest will get protected. Okay? Shareholders now, it's not a private limited company, sir. It is a public limited company. That's why. So in such case, they can appoint a principal officer. Principal officer, nothing but they'll appoint an IAS cadre kind of officer, sir. So those people will be acting as what? Signing authority. In any other case, okay, other than company, sir, any, okay, then if it is a non-resident company, who has to sign, sir? Whoever the person having power of attorney. Political party, CEO of political party has to sign. Local authority, principal officer has to sign. And any other person, sir, whoever person competent to verify can sign the written, can verify the written. Okay, political party who has to sign, sir? CEO. Local authority, principal officer. Then company into liquidation, liquidator. Company into insolvency, insolvency professional. Then management taken over by central and state government. Principal officer appointed by central and state government. If it is a non-resident company, power of attorney. Then, sir, in returns, we're going to discuss about updated return. Updated return is highly important for June 26 and December 26 exams, sir. There is amendment here in updated return. Updated return, sir, can be filed by any person, whether he filed return under 139.1. What is 139.1? Normal return. 139.4, belated return. 139.5, revised return. If whether he has filed any of these returns or not, still he can go for what? Updated return. Okay. What is the time limit? First, this point itself has been changed, sir. Previously, the time limit to file updated return is only 24 months. Now, the updated return can be filed till 48 months from the end of relevant assessment year. Previous year 25-26. What is the relevant assessment year, sir? Relevant assessment year is what? 26-27. So what is the last day of relevant assessment year? 31st March 2027. From there, how much time is there? 48 months. So by when it ends? 31st March 2029. 48 months means how many years, sir? 2 years, sir. 48 months means how many years? 4 years. Okay. Good morning, all. Okay. Okay, you are counting 24 hours, huh? In a year, basic, we'll have 12 months. Okay, I need not to tell all the month names also for you. There are It means what, sir? 48 months means 4 years. If you count 4 years, 31st March, 30, 31. Chanchal, Shenmug, Kavita, good morning. మెలకుగానే ఉన్నారా పక్క అందరూ? వన్ అవర్కి ఎన్ని మినిట్స్ ఉంటే 70 minutes. Okay, how many minutes will be there in an hour? 60. Okay, thank you. How many days in a year? Thank you. It has to be filed within 48 months from end of relevant assessment year. That means for previous year 25-26, you have the time to file updated return till 31st March 2031. Okay. While filing updated return, you should attach proof of payment of additional tax. Sir, they are giving 4 years time now. Okay. It's not enough if you pay the normal tax. Normally, when you file return, whatever the tax applicable, 234A interest applicable, 234B, 234C, that you have to do normally only. Other than that extra, you should pay additional tax also. So only when you pay additional tax, you can file updated return. Sir, I don't have any additional tax, sir. Actually, originally I reported 20 lakhs as income. But actually it is not 20 lakhs, 15 lakhs only. So for that reason, to reduce income from 20 to 15 lakhs, I want to file updated return. Then such option is not available. Updated return can be filed only when you gonna increase your tax liability. For decrease in tax liability, no concept of updated return. Okay, it is in favor of department, not in favor of SSC. The only favor you have is like, at least now you can file return. But for allowing you to file even afterwards, they want some penalty. But they are not calling it as penalty. They are calling it as what? Additional income tax. Okay, late fees kind of. But late fees is there anyhow. Other than this extra, in the form of additional income tax, they will gonna collect from you when you are filing additional income tax. Sorry, when you file updated return, they gonna collect additional income tax also. See, when filing updated return, normal tax, whichever is applicable on the updated income, has to be paid. Plus you should pay even what? Additional tax also. It is not just enough. It's not enough if you just pay the normal tax applicable. Okay. Updated return not allowed in the following cases. When, if such return is a loss return. Sir, with loss return will there be additional income tax? They are not even paying tax. If not paying normal tax, then there is no concept of additional tax. Okay, that's why in case of loss return, no updated return concept. In case of results into updated return results into reduction of tax liability, then also no updated return. Or it results into refund or increase in refund, then such case also. So only case when you can file updated return, you gonna pay some tax compared to what you paid already in the original return. Okay, so through updated return, only if there is a chance of paying tax, you can file updated return. If there is no chance of paying tax, then there is no concept of updated return for you. Understand, sir? Okay, then search requisition. Sir, search means you can understand. It's okay when income tax authorities has evidence or proof that you have some incomes which were not reported, then they can initiate what? Search. What is the requisition? Sir, requisition means they wanted to come for search to your place. But all before the income tax people comes itself, CBI already did right. Or ED, Enforcement Directorate has did the search operations. Or GST authorities. Some other authorities has already made search. And the books of accounts, documents, money, whatever is there, it is already seized. Now income tax people will come and do what? Because already the documents, books, property, everything has been already seized by CBI or any other department. Now instead of again doing search, they'll request the other departments to provide those books of accounts, documents or the assets to the income tax authorities. So they'll request other authorities. That's why it is called as what? Requisition. Okay, sir? There is a technical problem to carry out search. Why? Already some other department or some other authority has carried out search and seized the books of accounts, documents and the money, whatever you are having. Now, income tax cannot seize anything now, even if they initiate search. So instead of search, now they'll go for what? Requisition. They'll not request you. They'll request what? The other authorities they'll request, because they cannot search other authorities. They can only do request other authorities to provide your relevant books of accounts, documents or money seized to the income tax department. So that is called what? Requisition. Such is different, requisition is different. But in both the cases, income tax people will get the books of accounts and documents of an SSE into their possession. Okay. So when search initiated or requisition initiated, then you cannot go for updated return. Then survey conducted. Sir, what is search? What is survey? Sir, compared to search, survey is much more smoother provision. Okay, search na they believe confirm fraud. Survey na they just have doubt, maybe he is doing something. So they'll come inquire and all. In survey they cannot seize books of accounts and documents. But in search they can seize the books of accounts and documents. So survey is much more smoother provision and they still have some trust towards you. Then they'll come for what? Survey. If they find they had concurrent evidence that you are concealing some income, you are not reporting incomes properly, then search will be initiated. Okay? Search, requisition, survey. Any of these has been initiated, then you cannot go for updated return. Okay, na sir? Then revised return till when you can file? What is the time limit for filing revised return? Afterwards, if you want to revise, what you can do? No option. So then what you can go for what? Updated return. Yes, you didn't file normal return, but you have income which was not reported. You have income which was not reported. Okay, then what? Sir, that time you thought what happens, I'll see. But later on you got that fear. Maybe if income tax people caught now, they'll call it as undisclosed source of income and they'll take 78% of tax plus penalties plus prosecution depending on incomes and all. So what you thought? To avoid all this, at least now I'll file return. But already the belated return time limit also completed. So what option you have? Updated return. Yes. See, updated return is like you did some mistake, but that time you felt like what? We'll see what happens, what income tax people can do. But afterwards you realized, okay, maybe your friend or known person, something like this has already happened. Then the fear started inside. So okay, instead of having all that trouble, what you are thinking now? Will file return, even some extra tax also, no issues, I'll pay. So originally if you have filed return, it is enough with normal tax only. But not only just normal tax now, you need to pay even additional tax also. Okay? Yes, that I have to explain right afterwards. I wrote here, there is additional tax. How do we compute additional tax and all? I'll explain. You're sleeping or what? I said, previous year 25, 26. See, you have time till 31st March 2031. In between, any time you can file updated return. Whenever you had that Gnanodayam, that time you can file updated return. So you can file within 1 year, you can file within 2 years, 3 years, 4 years. See, understand, sir, how fast the realization happens, that much less will be the additional tax. Okay, so the additional tax is not fixed even if you file in 2 years or even if you file in 4 years. Okay, the additional tax increases based on the time you take. If it is within 12 months, there is less additional tax. If you take 24 months, then the additional tax will much more increase. 36 months, it will increase much more month. Okay, 48 months, it will increase much more. Okay, like that. For any assessment year, from the end of that year, 48 months. Not for assessment year 26, 27 or 27, 28. For any assessment year, from the end of the assessment year, you should count how many months? 48 months. That is the last day to file for updated return. You can file in between also, no issues. Okay? I explained that already. Huh? No. For every SSE it is applicable. Individual will clearly say it is individual. If nothing is mentioned, don't assume as individual. It is applicable for any type of SSE. Okay? See, when nothing is mentioned, then we should understand it is what? It is for everyone. For individual only, we should specify that is only for individual. Okay? Sir, got it? Do you have any doubts? Mac? Zone outs, zone ins. Vaishnavi, ఓకేనా? సిక్ అయ్యావు, సెలైన్ లెక్కిస్తున్నారని చెప్పింది నీకు మ్యాక్. జాగ్రత్త, ఎగ్జామ్స్ జూన్లోనే. సమ్మర్, హెవీ హీట్. డ్రింక్ కోకోనట్ వాటర్, గ్లూకాన్ డి. So you all also. It's okay, by the time it goes to March, you can't even okay, so there are some people who will get even rashes also because of the heat. It's okay, hydrate properly, maintain things and all properly. హెల్త్ బాగాలేదు, సెలైన్లేనా? వాడికి ఏమైంది? సిక్కు. వాడికి ఏమైంది? ఓకే. ఓకే, దెన్ పేరే ఉన్నారు, పావనియా? బావ, చరిష్మా. పక్కన పేరు భవ్య. ఓకే. Sir, a search was initiated at Bhavya's premises and they have collected or seized the money, valuable articles, books of accounts and documents. They have seized from whose premises? Bhavya's premises. But later on they came to know that all these books of accounts, documents which were seized not belongs to Bhavya, but they belongs to Charishma. Then she, Charishma, is also not eligible to file updated return. Nothing but Bhavya acted as a binami. Okay, they went and searched her premises. They found some books of accounts, documents, money, bullion, jewelry and all. But later on, Bhavya explained everything. I don't have anything. All this belongs to Charishma only. She is my friend. She asked me to keep at my place. So just I kept that. Okay. So who is the original gangster here? Charishma. That's why she is also ineligible for filing updated return. Okay. Sir, you did mistake. But before income tax authorities catch it, you have to file the updated return. Once they catch it now, then you don't have option to go for updated return. If that option is there, then everybody will say what? Sir, you found now, wait for 10 minutes, I'll file updated return and come. Okay, so nobody will get any penalties and all. So that's why what they said, you can file updated return before they initiate search, before they initiate survey, before they initiate requisition, or they searched or requisitioned with respect to some other person, but the money, bullion, jewelry, documents belongs to be to a different person. Then the different person also cannot go for updated return. Then here, no updated return can be filed, sir, when already an updated return is filed for such assessment year. So there is no revision of updated return. Once you file updated return, again updation is not there. Only one updation is only there. Okay. Then if already assessment, reassessment, recomputation or revision proceedings are pending or completed, then also you cannot go for updated return. AO has information in respect to such person under Prevention of Money Laundering Act. I mean, they already came to know that he did something suspicious and they had information under Prevention of Money Laundering Act, Black Money Act, or Prohibition of Binamis Act, or under the Smugglers Foreign Exchange Manipulation Act. Under any of these acts, already AO has information that this SSC has did some kind of malpractices. Then what they can do, sir, instead of going for, I mean, such persons are not eligible to file updated return. Then information for a relevant assessment year is received under an agreement under section 9090A. Sir, 9090A, it is about DTAA, double taxation avoidance agreements, which will be entered with foreign countries. Now, from foreign country, India got some information. Okay, this person has certain incomes, okay, which was not have been reported and all. So based on that, if that information is already received, then also this person cannot file updated return. Prosecution proceedings are initiated. Then the last one, sir, this is Finance Act 2025 amendment. See here. Show cause notice under section 148A issued after 36 months from, sir, this is not an easy amendment, sir. You will not understand it simply. So please listen to it little carefully, sir. Because they said 148A, so I need to brief about what is 148A, what is about 148. Then only you will understand the significance of the amendment. Okay. Finance Act 2025 has added a new situation where you cannot go for updated return. Okay. So this is also important. Show cause notice under 148A has been issued after 36 months from end of relevant year, and it is a fit case for notice under section 148. So first we'll understand. Sir, to initiate 147, what is 147? 147 is about income escaping assessment. 147 is about income escaping assessment. They did normal 143 assessment. But later on they found out that you have some income which was not assessed properly, either because of mistake of assessing officer or you didn't shown properly, some reason, certain incomes were missed from assessment. Okay, and it impacts adversely the revenue because the revenue interest is at stake. It is a material amount also, so small amounts now they might ignore, but it is a considerable amount only. Then they'll initiate what? Section 147, income escaping assessment. But straight away they cannot invoke 147. To invoke 147, first they should give notice under 148, show cause notice. We wanted to invoke 147 towards you. What is your cause that we cannot invoke, or why not we can invoke 147? Like that they'll give a show cause notice. Okay. For 147 to start, what has to be done first? 148 notice has to be given. Later on, sir, even they thought department is wasting so much of time on giving 148 notices also. So they introduced one more thing called 148A. So before giving 148, they'll issue 148A. So 148A is a notice first will be given to the SSC. Then they'll check whether it is a fit case to give 148 notice or not. అర్థమవుతుందా అండి? మళ్ళీ ఒకసారి చెప్తాను. 147 is about what? Income escaping assessment. To start income escaping assessment, what has to be done? 148 notice has to be given. Okay, if 148 notice is given, then obviously they'll go into 147 assessment and all. So they thought so much of department or officers' time is getting wasted by involving into non-fit cases or irrelevant cases also. They are invoking 148, 147 and wasting their time. It is not productive to the department. So they thought what? We'll introduce one more thing called 148A. So first they'll give you 148A notice. Then they'll ask you some basic information and all. Then they'll decide first whether it is a fit case for 148 or not. If they decide it as a fit case, then they'll give 148 notice and then they'll go for 147 income escaping assessment. అర్థమవుతుందమ్మా వైష్ణవి? Sir, I understand. It's like assessment procedure concept. I'm bringing little forward, so you may feel little complicated or little heavy for you to understand. I'll repeat once again, no problem. 147 is about what? Income escaping assessment. Sir, I already said in the beginning of the class, there are several assessments. First, there is a self-assessment. When we'll do self-assessment? At the time of filing return. Then there is something called summary assessment. What is summary assessment? Who will do? The system itself will do summary assessment. If there are any deviations, they'll give notice under 143 subsection 1. Okay. Then 143 subsection 3. 143 subsection 3, which we call it as what? Scrutiny assessment or regular assessment. How many done, sir, as of now? Self-assessment, summary assessment, scrutiny assessment under 143 subsection 3. If you are not cooperating to scrutiny or not filed return, then they can go for best judgment assessment under section 144, fourth one. If any of these assessments are done or not made, but after some 2 years, 3 years, income tax people came to know that he has some incomes which was escaped from assessment in the earlier stages, then they can invoke what? Section 147. But they can't straight away invoke 147. First they should issue what? 148 notice. But they feel even giving 148 notice is also a time wasting if it is not a fit case. That's why they have decided even to give 148A notice first. So first they'll give what? 148A notice. Then they'll analyze whether it is a fit case. Sir, how do they decide it is a fit case or not? Sir, there may be some under-reporting. But what is the extent of that income also they'll think. If it is a very small amount, then they'll ignore, they'll drop 148 and they'll not carry out with that kind of assessment. If they feel like the income escaped is also material or significant amount, then they'll decide it as a fit case and issue 148 notice and then they'll proceed into section 147 income escaping assessment. You understand this process? Sir, all this is to understand the amendment, the background. Sir, now assessment year 22-23. Assessment year 22-23. Sir, if you want, copy this example part in your concept books also. You will not find example there in the concept book. I think it is kept as like refer class notes, for example. That's why. Okay, you don't have class notes with you now right now, so that's why copy this example. Okay, first listen, then you can copy. Assessment year 22-23. What is the end of relevant assessment year, sir? 31st March 2023. For that, notice under section 148A is issued under 1st May 2026. Okay, sir, first notice under 148A is issued and then they'll check some preliminary investigation and all, and they'll do preliminary investigation and investigation they'll do, and then they decide themselves whether it is a fit case for 148 or not. So when they decided it as a fit case for 148, 5th July 2026. So okay, so this period in this interim period you cannot file updated return. Sir, here on 5th July they decided it as a fit case for 148. Then afterwards also you cannot file updated return. But here 5th July they decided like it is not a fit case for updated return. Then from 5th July again you can file updated return. Okay, look at this example, sir. You'll understand much more better. Sir, here the due date for 139 subsection 4 or subsection 5 ends on when 31st December of assessment year. From there we will taking what? End of relevant assessment year. From there you have time to complete or time to file updated return. How many months is there, sir? 48 months is there. Okay. Now notice under section 148A is issued on 1st May 2026. Notice with respect to which year, sir? This is assessment year 22-23. Okay, let me tell you, write down once again. Assessment year 22-23 related. The end of relevant assessment year is what? 31st March 2023. You have time limit to file updated return till when? 31st March 2027. Okay. Now on 1st May 2026 they have issued what? 148A notice. Once they issued 148A notice, from 1st May you cannot file updated return. Okay. So from 1st May you cannot file updated return. Then 5th July they have decided whether it is a fit case for 148 or not. Let's say if they decided as fit case, then from 1st May you cannot file updated return. But what happened? 1st May they given 148A notice. Okay, you cannot file updated return. But on 5th July they decided like it is not a fit case for 148. So only in this interim period you cannot file updated return. Later on again you can file updated return because it is not a fit case for section 148. Understand, sir? This is the amendment which says like in this interim period you cannot file updated return. If it is not a fit case, later on again you can file updated return. If it is a fit case, then from that date itself your option to file updated return will get lapsed. Understand, sir? See, show cause notice under section 148A issued after 36 months, and this should be what? After 36 months from end of relevant assessment year, and it is a fit case for notice under section 148, then you cannot issue, sir, then you cannot go with updated return. But if it is not a fit case, then the time it is decided as not a fit case, you can go for updated return. Sir, everybody understood this amendment, sir? Okay. Sir, this can be linked with assessment procedures and can be asked as a question, sir. Very important, because mostly assessment procedures also they are not asking a 7 marks question. Returns also they are not asking a 7 marks question. Usually in that slot, I mean, sir, here if you remember, sir, let me show you the index. Sir, from this slot of chapters we'll get definitely 14 marks, sir. Maybe not question number 5. Sometimes in a extreme situation they may change even question numbers also, but definitely from this set of chapters only 14 marks, not more than 14 marks also. Okay, most how it is happening now means from appeals and revision they are asking a 7 marks question, and then advanced tax interest and ICDS they are asking a 7 marks question. But in advanced tax and interest also there is no amendment. Even in appeals and revision also there is no much important amendment. Where amendment is there, in updated return there is significant amendment is there. So it is, I mean, there are high chances for asking it. So in this slot they can ask 7 marks from any chapter. So either they can drop question from these two and can ask a question on updated return linking with assessment procedures also, because assessment procedures also there in the same slot, or else they may drop appeals and revision question and can again frame a question linking with updated return and assessment procedures. Understand, sir? So this set of chapters, you get 14 marks since there is an amendment in return of income. So for this attempt, even return of income also will become important. Assessment procedures also will become equally important, because see, the current amendments are, it's not just only based on updated return. You should have knowledge of even assessment procedures also. So it is a mixed kind of question they're gonna ask. So understand, sir, amendments, there are simple amendments only, sir, which are going to be easy. On amendments, at least 1 or 2 questions going to be tested. So that question which is of having significant impact, na, first question is updated return only. At least an MCQ we can expect. Worst case also. Sir, everybody understood this clearly, right? This concept. Okay. It's okay, sir. We'll take break. Then after break, we'll discuss how to compute tax, normal tax, how do we compute, then additional tax, how we should compute. And then with the help of ChatGPT, we don't have any questions actually on doing this additional tax and all, because additional tax also there is amendment. Why? Previously it used to be what? 24 months only. Now it is extended to 48 months. So there also there is an amendment. So but we don't have any questions are in our sources available. Even in CS source also we don't have. So with ChatGPT I have created a question morning only. That's why I was 8 minutes late for the class today. Okay. I was creating or framing a question for this concept. So it took time for me. Okay. So take break, sir. We'll again start at 8:20 and we'll finish off the whole total returns chapter, sir, including questions today. So then, sir, in updated return, what we have discussed till now, updated return can be filed by any person irrespective of whether he has filed return, normal return, belated return, loss return or revised return, whether he has filed it or not, he can file updated return. Even if he filed normal return also, he can file updated return. Even if he didn't file also, he can file normal return. Updated return. Okay. What is the time limit for filing updated return, sir? 48 months from the end of relevant assessment years till 48 months. You can file updated return. But when you are filing updated return, definitely you should have paid tax. Only when it results into increase in your tax liability, then you can file updated return. So you should attach the proof of payment of additional tax. Sir, when you are filing updated return, it's not enough only if you pay the normal applicable taxes. Since they are giving you an extra facility to file even updated return, they are asking you to pay additional tax also. Additional tax also. Okay. Normal tax on updated income you have to pay, and even additional tax also you should pay. Then updated return is not allowed. When updated return is not allowed, if such return is a loss return, it results into reduction of tax liability, or it results in refund or increase in refund due. Search under section 132 is initiated, or requisition under section 132A is made. Survey under section 133A is conducted other than TDS TCS survey, or any money, bullion, jewelry, valuable other articles, books of accounts, documents found to be in possession of some other person during the search was confirmed that they belongs to SSE. Then SSE cannot file updated return. Then no updated return in the following cases: when already filed updated return for such assessment year, assessment, reassessment, recomputation, revision of income proceedings are pending or completed. AO has already information about such person under PMLA Act, Prevention of Money Laundering Act, Black Money Act, Prohibition of Benamis Act, or the Smugglers Foreign Exchange Manipulation Act, and the information that AO has information, such, AO has to tell even the SSE, or has to even communicate the SSE that already AO has information under PMLA, Black Money, Benamis Act, or even under Smugglers and Foreign Exchange Act. Okay. It's okay, Sridhar. Thank you for your IDT marathons, code 54. Thanks, BCCA. Okay. Thank you. AO has information in respect of such person. Okay, then. Information for a relevant assessment year received under an agreement under section 90 or 90A under DTAA, or prosecution proceedings under section chapter 22 has been initiated. Finance Act 2025, Finance Act 2025 amendment is what, sir? Show cause notice under section 148 is issued after 36 months. From the time show cause notice under section 148A issued after 36 months, you cannot go for what? Updated return. And it is a fit case for 148. If at all it is decided as not a fit case, then from that time again you can file updated return. Okay. So then we're going to start about computation of tax, normal tax and additional tax. Sir, first, two scenarios. Assuming SSE already filed return, normal return, and going for updated return. Second case, he didn't file normal return, only directly filing updated return. Sir, SSE furnished a return of income. First, in updated return, whatever is the extra income you are shown, the original income plus updated income, take the total and on the total compute tax. So let's say originally SSE reported 10 lakhs plus he updated it to 14 lakhs. Now tax has to be computed on what? 14 lakhs. So okay, tax on updated return 14 lakhs you calculate. Then TDS, TCS, advance tax, MAT, AMT, DTA credit. If any of these credits are there, adjust them. Then since he already filed return initially, he has even self-assessment tax also. Sir, at the time of filing return, what you will do? You will pay self-assessment tax. So since he already filed return, he might have paid some self-assessment tax also. Subtract that one. Okay, then compute interest applicable under 234A, 234B, 234C. Okay, but at the time of filing return originally, also you might have paid some 234A, B, C interest. So now add, sir, here what you are doing, sir, you are computing 234A interest based on updated return related tax. But at the time of original filing also you might have computed some 234A interest. So first you add on the cumulative amount and then subtract whatever you have paid already. Okay, so then you will get what? Total normal tax. This is in case of what? When the return is filed. If return is not filed, then whatever the total income you are showing in updated return, on that compute tax. Adjust if any TDS, TCS, advance tax, MAT, AMT, DTA credit is there. Now on that calculate 234 ABC interest and even 234 F fee. Why? Because previously return is not filed. So that's why 234 F fees is also applicable. Add that, then you will get the total normal tax. Okay. So now what is additional tax? Computation of additional tax. Sir, the additional tax depends on within how much time you have paid. Okay, normal tax is this one, sir. Along with normal tax, you should pay even additional tax also. How much, sir? If it is paid within 12 months, time limit after 139.45, but within 12 months from end of relevant assessment year. Sir, understand clearly here. 139 subsection 4 or 5 time limit expires by when? 139.4 means what? Belated return. 139 subsection 5 means revised return. What is the time limit for them? 3 months before completion of assessment year. What does it mean? 31st December. Okay, let's say here assessment year 25-26 taken. That means the time limit is what? 31st December 2025. From here not 12 months. From here time limit after 139 subsection 4-5, but within 12 months from end of relevant assessment year. Sir, this is 31st December 2025 and when the assessment year ends on 31st March 2026, from there again 12 months. So overall the period is not 12 months here, it is how much? 15 months. Because in the current assessment year only last 3 months, after expiry of assessment year also another 12 months. If you filed updated return in this period, then the additional tax you have to pay is 25% on normal tax. In normal tax you should include surcharge, cess and even interest also. On the total of that amount you should pay 25% as additional tax. Sir, after 12 months, but before 24 months, the additional tax is 50% on normal tax. If it is between 24 to 36 months, 60% on updated, normal tax. If it is between 36 to 48 months means it is 70% on normal tax. It is 70% on normal tax. Right, sir? So what is the additional tax to be paid? From the time limit related to 139 subsection for belated return or revised return, nothing but 31st December of assessment year. From there till 12 months from completion of relevant assessment year. So total period will be 15 months, not just 12 months. For all this period, in this period, if you have filed updated return, pay normal tax plus additional tax at a rate of 25% on normal tax. If it is between 12 and 24 months, then 50% on normal tax is the additional tax. Then between 24 to 36 months, then 60% on normal tax is the additional tax. 36 to 48 months, then 70% of normal tax is the additional tax to be paid. So to understand this one, created an example. Let's say Ramesh is a resident individual has the following details for assessment year 24-25. Original income he reported is how much? 7 lakhs. Additional income discovered later is 2,50,000. Original income reported is 7 lakhs. And additional income discovered later is how much? 2,50,000. Taxes already paid, TDS 30,000, advance tax 20,000. Due date of return is 31st July 2024. Original return filed is 31st December 2024 and updated return is filed on 31st August 2024. Assume old tax regime and cess at a rate of 4%. Sir. Sir, he filed 31st December 2024. But the assessment year ends when 31st December 31st March 2025. From there, when he filed, so how many months is there, sir? Between this time period, 31st August 2027. How many months is there? Sir, 31st March 2025 to 31st March 2026, 12 months. 31st March 2027, 24 months. Okay, 16 చెప్తున్నారు మీరు. Already 24 దాటిపోతుంది. 25 to 27 itself, 24 months. So after 31st March 27, how many months are there? April, May, June, July, August, 5 months are there. 24 plus 5, total how many months, sir? 29 months. Can they file updated return? Yes. Updated return can be filed till how many months, sir? 48 months from the end of relevant assessment year. Here assessment year is what? 24-25. Assessment year 24-25 ends on when? Assessment year 24-25 ends on 31st March 2025 and the time is how much, sir? 29 months. Okay, they filed on 31st August 2027. We can even tell how much additional tax they should pay. Percentage. Additional tax percentage tells, sir. 50%. Up to 12 months from end of relevant assessment year, 25%. Up to 24 months, 50%. 24 to 36 months, 60%. So additional tax is 60% of normal tax. Clear? Till this point, okay. So first they reported original income 7 lakhs. Sir, what we'll do now? First we'll find out how much they paid tax originally. How much they paid tax originally. Sir, forget about 234B and C whether they are applicable or not. I think mostly they are not applicable also. But even if there is 234BC also, okay, forget about 234BC. We are only considering 234A interest alone. Okay, for that, sir, let me make this clarification. 234A interest. If return of income filed, then interest has to be calculated. Interest at 1% per month or part month from due date of filing return. Due date of filing return of income to actual date of filing return of income to actual date of filing return of income. Due date of filing return of income to actual date of filing return of income, you need to calculate 234A interest. Sir, first original income is how much? 7 lakhs. Now calculate and tell me on 7 lakhs under old regime he is an individual, what is the tax liability? On 7 lakhs, what is the tax liability? Huh? 54,600. Okay, including cess it is 54,600. 52,500 is what? Tax. And then cessed rate of 4% is 2100. So total liability here is how much? 54,600. Okay. Sir, when he filed return, due date of return is 31st July. But when he filed 31st December 2024. 31st December 2024. So how many months delay he has made? August, September, October, November, December. 5 months. Okay. So for 5 months, sir, before that, sir, out of this total tax liability 54,600, already some amount is paid by way of what? TDS and advance tax. So from 54,600 subtract this TDS 30,000, advance tax 20,000. So 4,600 was the tax due. On this we should calculate what? 234A interest. 4,600 into 1% into 5 months. How much? 230. Okay. So total amount he paid at the time of original return is tax liability 54,600 plus interest 234A, total liability 54,830. Whereas since already 50,000 is there, additionally he paid how much, sir? Total 4,830. I mean 4,600 self-assessment tax and 230 interest. This is at the time of filing normal return. We didn't came to updated return, sir. This is at the time of filing normal return he did. Now about what? Updated return. Sir, updated return, what they found? They discovered additional income later. How much? 2,50,000. Now what is the updated income? 9,50,000. So now at the time of filing updated return, we should compute tax on what? Updated income 9,50,000. So compute tax on 9,50,000 and tell. Tax plus cess. 1,06,600. 1,06,600. Now, out of 1,06,000, now again, sir, 234A interest. Out of 1,06,600, already there is TDS and advance tax, 30,000 and 20,000. And at the time of filing normal return, self-assessment tax also paid to the extent of how much? 4,600. So if you adjust all that, how much is there? 52,000 is there. 52,000 is there. Now, sir, on this 52,000, sir, usually at the time of filing return also, you should have reported this much as income. But you have shown only how much? 7 lakhs. So since only on 7 lakhs you calculated, your 234A interest which you computed originally is wrong. So you should again recompute 234A interest also. 52,000 into 1% into 5 months. How much, sir, it is? 2,600. Okay, now finally if you see, total tax liability is how much, sir? 1,06,600. Interest is how much? 2,600. Total 1,09,200. But you already paid some amount. How much you paid already? TDS 30,000, advance tax 20,000, self-assessment tax 4,600, and even interest under 234A you paid 230. So total you already paid how much? 54,830. From this you subtract this 1,09,200. How much, sir, it is? 54,370 is the normal tax to be paid now. Normal tax to be paid now is how much, sir? 54,370. Additional tax, how much percentage? 60%. So 24 to 36 months now, additional tax is how much? 60%. So 54,370 into 60%, now it is how much? 32,622. So the total additional tax to be paid at the time of updated return is that normal tax payable 54,370 plus additional tax 32,622. If you round it off, it will become to 86,990 you should pay at the time of filing updated return. Sir, understood, sir, everyone, this point? Okay. Then we'll go into our workbook also and solve the questions quickly, sir. So question number 1, sir. So it is a CA inter question. Explain with brief reasons whether the return of income can be revised under section 139 subsection 5 in the following cases. Belated return, can it be revised? Can a belated return be revised? Yes. Return already revised, can it be revised once again? Can a loss return be revised? Go and check. ఓకే నన్ను అడిగే పని లేదు, మీరు వెళ్ళిపోయి మళ్ళీ ఓపెన్ చేసి చెక్ చేయండి, అది మీకు తెలియాల్సిందే, నేను ఎక్స్ప్లెయిన్ చేయడానికి ఏముంది అక్కడ? దర్ ఇస్ నథింగ్ టు ఎక్స్ప్లెయిన్ దర్. ఇఫ్ యూ హ్యావ్ డౌట్ నా అగైన్ ఓపెన్ వాట్ 139 subsection 5 and read all the points once again. So revised return, which returns can be revised, sir? If there is any omission, wrong statement in return of income under 139 subsection 1, normal return, 139 subsection 3, loss return, 139 subsection 4, belated return, even 139 subsection 5, revised return. All these can be revised. So in all these three cases what you can revise, but you cannot just simply say like yes, 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 you need to give explanations also. Then question number 2. State whether the following SSCs have to file return of income. If so, what is the due date? Sir, a registered trade union and a public trust hospital, you are there. This registered trade union having income from let out property 1 lakh. Sir, this is having exemption under section 10. So what does it says under 139(4), those sub points will be there. There it is said like, before giving exemption, you should check whether their total income exceeds basic exemption limit or not. See, a registered trade union is having income from house property, which is exempt. Okay, section 139 foresee mandates filing of return only when the total income exceeds maximum amount not chargeable to tax, nothing but basic exemption limit, without giving provisions of section 10. In the case, even without giving effect of 1024, their total income is how much, sir? 1 lakh only, which does not exceed basic exemption limit. So are they required to file return or not required to file return of income? In first case, there is no mandatory requirement to file the return. Second one, sir, a public trust hospital having an annual receipts of 505 lakhs and availing exemption of 3,40,000 under section 1023C with total income of 2,40,000. Sir, their total income now is how much? 2,40,000. If this exemption, sir, after exemption it is 2,10,000. If you add back exemption, how much it will be? 5,50,000, which exceeds the basic exemption limit. So what they have to do? They have to file return of income. Okay, it is how much, sir? See, 5,50,000, which exceeds 4 lakhs. Sir, why 4 lakhs has been taken? Default regime. Okay, if nothing is mentioned now, we should check only what? Default regime. It exceeded 4 lakhs basic exemption limit. So trust has to file its return of income by 31st October 2026. Sir, why October, sir? Where it is mentioned? Sir, their receipts are 505 lakhs. So tax audit is applicable. Since audit is applicable, it is 31st October 2026. Turnover exceeding 1 crore. Okay, read the question and understand and think in each case whether return has to be filed or not. Question number 3. Okay, first case, sir. X is a resident individual, age 80 years, has total income of how much? 2,85,000. He has claimed a deduction of 1,50,000 under ATC. Okay, sir, we want gross total income or net total income for return of income? Gross total income. So this total income, they said, it is what? Net total income. So this is after claiming deduction. So 2,85,000. So for 2,85,000 is the net total income. Then they have deduction 1,50,000 under ATC. Long term capital gain 80,000 is not taxable by virtue of exemption under specified threshold under 112A, but still it was included in 2,85,000. Assume that he has opted for normal provisions of income tax. What is, whether he is required to file total income or not? Sir, what is this total income? 2,85,000. Sir, this 2,85,000 already includes long term capital gain, so we need not to add. This long term capital gain 80,000, they said, that is already included. Why? Because all the incomes are part of total income. So already 80,000 included. But since it is net total income, they already claimed what? Deduction. So we want gross. So what we should do? We should add back deduction 1,50,000. How much, sir? 4,35,000. Sir, 4,35,000. He is what? He is a X is a resident individual, age 80 years. So he is what? He is a super senior citizen. Since he is claiming deduction under ATC, we can assume like under which regime he is? Old regime. Sir, in default regime, he cannot claim ATC, right? So that's why we need to consider him as what? Under old regime. Sir, under old regime for senior citizen, what is the basic exemption limit available? 5 lakhs. So his gross total income didn't exceeded 5 lakhs. So is he required to file return of income? No, he is not required to file return of income. Then would your answer change if he has incurred 1,05,000 towards payment of electricity bills? Yes. Since it is a specified financial transaction, electricity bill in excess of 1 lakh in a financial year, he has to file return of income mandatorily irrespective of his total income. Then ABC is a partnership firm which has a loss of 10,000. Tell, is it required to file return of income? Firm, sir, no income, it is having loss. Company, firm, LLP, the first line itself is that in the chapter. Company, firm and LLP has to file return of income mandatorily irrespective of their total income. So here, even though it is loss, they have to file what? Return mandatorily. Then an association eligible for exemption under 1023B has income from house property. Sir, yes, house property income is exempted for them. But if you don't claim exemption, what is the total income? Because we need to check without claiming exemption under section 10. So then what is the total income? 6,60,000, which exceeded basic exemption limit. Okay, then they have to file what? Return of income. Then Y aged 45 years, an employee draws a salary of 5,90,000 and his income from fixed deposit with bank is how much? 10,000. Sir, he draws salary 5,90,000. From there, standard deduction available 75,000 under default regime. Old regime, it is 50,000. Okay, depending whatever he has claimed, any of the regimes, and he has FD interest of 10,000. So overall, it will be more than basic exemption limit only. So he has to file what again? Return of income. Sir, look at question number 4. Read quickly. So try to read questions on your own and at least check how far you can recollect the answers. I already know the answers. Even if I don't know, it's not a problem. Only if you don't know, it's a problem. Sir, see question number 4. What is question number 4? Vineet exercise the option to shift out from default regime. Okay. Submit is written off income under optional regime. Optional regime na nothing but what, sir? No. Old regime. Okay. Consisting of income under at salaries, house property, bank interest. On 21st December 2026, he has filed return. He realized that he has not claimed deduction under section 80 DTA in respect of his interest income on the savings bank account. He wants to revise his return of income. Can he do so? Okay, can he do so, sir? Yes. He has time limit till what? 31st December 2026. He has the time to revise the return. So he filed 21st December. It is a what? Belated return. Even it is a belated return, it still can be revised till 31st December 2026. Okay. Examine, would your answer be different if you have discovered this in 21st March 2027? Yes, the answer will be different. If he has discovered on 21st March 2027, by that time, the time limit to revise return under 139 subsection 5 has been expired. So you don't have the option to revise. Here, he can file updated return. He can file updated. No, he cannot even file updated return because here it is not creating additional tax. He is claiming what? 80 TTA deduction, which results into reduction of his income tax liability, not increase of additional tax liability. So he can't even file updated return also. Then question number 5. Explain the term return of loss under Income Tax Act 1961. Can any loss be carried forwarded even if the return of loss has not been filed? Sir, we have discussed detailedly, sir. Which losses can be filed, carry forwarded? Cannot be carried forwarded, you tell. Which losses cannot be carried forwarded? Cannot be carried forwarded. Which losses cannot be carried forward? Business loss, speculative business loss, specified business loss, capital loss, then loss from owning and maintaining horses for race. These 5 can't be carried forward if return is not filed by the due date. Which can be carried forwarded? Horse property loss and unabsorbed depreciation can be carried forwarded even though return is filed belatedly. However, sir, the restriction is only for carry forward, not for set off. Then question number 6. List the persons who should apply for PAN. Every person who is accessible to tax on or before 31st May, who is accessible to tax, that's what we wrote in the book. Then every person carrying business or profession and total over turnover exceeds 5 lakhs or likely to exceed 5 lakhs. Then they have to apply by when? Before the end of that financial year. Or a resident person who enters into a financial transaction of aggregate rupees 2,50,000 or more, and such persons related director, partner, principal officer of such person on or before 31st May of the immediate following financial year. Then how many questions? Okay, 12 questions we have. Okay. 7th question. X is an individual got his books of accounts for the year ending 31st March 2026 audited under section 44 AB. His total income is 5,20,000. He desires to know if he can furnish his return of income for the assessment year through tax return preparer. Tax return preparer. Sir, who cannot file returns through tax return preparer? Specified class of persons. Who are called specified class of persons? Any company or any person who has requirement to get their books audited under section 44 AB or any other act, whether his books of accounts audited or not audited. Since his books of accounts are audited, he cannot file his return of income through tax return preparer. So that is the conclusion, sir. Here he cannot furnish his return of income through tax return preparer. Then question number 8. Akash has undertaken certain transactions which are listed below. You are required to identify the transactions in respect of which quoting of PAN is mandatory in related documents. Payment of life insurance premium 45,000, sir. Sir, when it is mandatory, excess of 50,000. So here PAN not required. Payment of rupees 1 lakh to a 5-star hotel for stay for 5 days with family, out of which rupees 60,000 was paid in cash. Sir, payment in a hotel more than 50,000 in cash. So what? Applicable. PAN has to be quoted. Then payment of 80,000 through ECS for bank through bank account for acquiring the debentures. Yes sir, any Indian company debentures if you are buying for more than 50,000, then also 50,000 or 1 lakh. 50,000 only. Okay, it is applicable. Let me show you. Bonds, debentures of a company or institution. How much, sir? 50,000. Then payment of 95,000 by account pay check to Thomas Cook for travel to Dubai for 3 days to visit relatives. Sir, how much, sir? 50,000, but the payment is through cash. What he has did? 95,000 he paid, but it is through what? Account pay check. So not required, sir, not mandatory. See, fifth one. No, since the amount was paid by account pay check, quoting of PAN is not mandatory even though payment exceeds 50,000. If it is through cash, then payment has, then PAN has to be quoted mandatory. Then applied to SBI for issue of credit card. Debit card and credit cards are mandatory to quote your PAN number. Okay, so this question little important, sir. Conceptually, I think this point we didn't wrote in the notes. So here we'll see. What will be the consequences when Raghav paid 75,000 in cash to a travel agent for foreign travel, excess of 50,000? But that means he has to quote what? PAN number. But business purpose, by intentionally quoting the wrong PAN. Would your answer be different if such cash payment was payment for travel to Nepal? See, if a person is required to quote his PAN in any document, quotes a number which is false and which is either knows or believes to be false, then how much is the penalty, sir? Then AO may direct such person shall pay penalty of 10,000 under section 272B subsection 2. In the given case, sir, since Raghav was misquoted, a penalty under 272B is leviable. Okay, however, sir, before levying penalty, opportunity of being heard has to be given. Okay, the answer would remain same even if it is to Nepal, because there is no exception for Nepal, sir. They said simply foreign travel. Then updated return. X would like to furnish his updated return for assessment year 25-26. In case he has furnished updated return of income, he would liable to pay 2,50,000 towards tax and 35,000 towards interest after adjusting tax and interest paid at the time of filing earlier return. You are required to examine whether X can furnish updated return in the following dates. If yes, compute the amount of additional income tax to be paid also along with updated return. Sir, they already given us normal tax to be paid. See, X would like to furnish updated return. In case he furnish updated return, he has to pay how much? 2,50,000. And interest how much? 35,000. So they already said normal tax. We need not to compute what is this normal tax. Okay, they are asking whether he can file updated return or not under those three different situations. If he can file, how much is the additional tax he has to pay? Sir, first, what is the end date of from assessment year 25-26? First we need what, sir? Not 31st straight away, sir. The due date of filing revised return we need first. So that is what? 31st March 2025. Okay. And from there we count till 31st March 2026 because that is the end date of assessment year. So here 3 months, and from here we should count how many months? 12 months. So from 31st March 2027, this is the first case. Then what? Sir, 12 months happened here. Then the next one is what? 24 months. 24 months not till when? 31st March 28 time limit is there. Then 36 months means till what time is there? 31st March 2029. Then 48 months now he has time till when? 31st March 2030. He has time limit. Now, what are the instances they gave, sir? 31st March 27, 28 February 28, 31st May 2028. Sir, in all these cases actually you can file updated return because 48 months expires only by 31st March 30. But we need to understand in which each case how many months it is. Sir, they filed on 31st March 2027. That means what? Within 12 months. Less than or equal to 12 months. So what is the additional tax, sir? 25%. Then by 28th February 28. Sir, that means by 31st March 28. So how many months less than or equal to 24 months? How many months, sir? How many? 50%. Then here by 31st May 2028. Sir, after 36 months. So sorry, after 24 months. So it is what? Less than or equal to 36 months. It is how much? 60%. Sir, before amendment, in this case there is no updated return option. Third case. But now with amendment, even in third case also we can file updated return and we should pay how much as additional tax, sir? 60%. We'll calculate that also. 2,50,000 plus interest, how much? 2,85,000. So on 2,85,000, calculate 25%. How much? 71,250 in first case. Second case, sir, 50%. 1,42,500. Third case, 60%. 1,71,000. $71,250, correct only, na? 1,42,500 and third one 1,71,000. Then question number 11. Miss Heatle, an individual engaged in business of beauty parlor, has got her books of accounts for 31st March 2026 audited. Her total income is 15,35,000. She wants to furnish as return through tax return preparer. Not possible. Why? Audit applicable. So she is a specified person. She cannot, specified class of person. She cannot file her return through tax return preparer. Then state with reasons whether you agree or disagree with the following statements. Okay. Return of income of LLP could be verified by any partner. First, designated partner. If designated partner is not available or mentally incapacitated, then any other partner. Okay. See, the disagree should be by designated partner. Okay. Any other partner can verify when there are any unavoidable reason for designated partner or when there is no designated partner. Then time limit for filing return under 139(1) in case of A having total turnover of 160 lakhs for the year ended 31st March 2026, whether or not declaring presumptive income under 44 AD is 31st October 2026. Disagree, sir. See, A offers his business income if as per presumptive taxation, it is 11.6 lakhs. Why? 100 lakhs into 8% we do. Balance 60 lakhs into 6% we'll do. 100 into 8% na 8 lakhs, 60 into 6% na 3.6 lakhs. Total how much? 11.6 lakhs. So if we opt for presumptive taxation, then the due date will be only 31st July because audit is not applicable. If we didn't opt for presumptive taxation, then audit applicable. In that case, it is what? 31st October. But what they said, irrespective of they opted for presumptive scheme or not, their due date will be 31st October. It is wrong. If they opt for presumptive scheme, due date is what? 31st July only because audit not applicable. If they didn't opt for presumptive scheme, then the due date is 31st October. Okay, sir. So with this, we have completed return of income, sir. So next one we're going to start is with what? You have to decide until. We'll go with advanced tax or else we'll go with PGBPA. So okay, we'll go with majority. Okay, even the students in online also can participate. Next chapter, which you want. Okay, Pavani, I'll share the PDF in the app. So here one note for advanced tax. First I'll take here advanced tax PGBP. Okay, show of hands method. You have to take a decision. Runde choice lane, moodo choice ledu. Are you conduct live class through YouTube? No, today and this is the last live session in YouTube. You can enroll for fast track classes from BCCA app. You can contact online numbers or directly you can download BCCA app in Android, iPhone, and even in desktop also you can directly visit BCCA website. There you can order fast track classes. I'm asking. Okay, here out of girls, 2 votes for advanced tax, 3, 5. Okay. అసలు ఏం చాప్టర్లు సార్ అంటామని ఓకే తీసుకెళ్ళి ఇంటర్ క్లాస్లో పడండి. Advanced tax. Okay, here also most people are asking for PGBP only, sir. Sir, I'll start with PGBP only. Why I even introduced advanced tax provision? Maybe PGBP will take another 4 or 5 days. You may feel, I mean, not everybody, but some people may feel like already 8-9 days fast track classes completed, but not even completed. Sir, marks wise we are covering less. Understand? So if advanced tax so first itself we can cover some weightage chapters also, no issue sir, we'll cover with PGBP. In first 10 days we'll cover less weightage chapters but which are fundamentally important, PGBP and all. Okay, if we start PGBP that only happens because along with PGBP, once I complete PGBP I need to go into assessment of companies. Okay, so those 2 set if we complete only, then we can go for tax planning. From then again we can straight away go into the weightage chapters like transfer pricing and DTA. Okay, no sir. Then again we'll come back here and we'll complete advanced tax assessment procedures such as Caesar and all. And last slot we'll give it for business restructuring and NR taxation. Okay. So our target is simple, sir. In the coming 5 days we should complete PGBP and most part of assessment of companies in the coming 5 days. By 20 days, if we could complete the PGBP, assessment of companies, then tax planning chapters. So tax planning by 12 days, 12 or 13 days, we need to complete assessment of companies and even tax planning. Then in the rest 7 days, we should complete even transfer pricing and DTA. So okay, then by 20 days, we'll complete how many marks? Question number 2 we have completed, question number 3 we have completed 28 marks, then transfer pricing and DTA another 2.5 questions. By 20 days we'll cover 4.5 questions, 20 days. Then in the last 10 days, sir, first we'll come with what? Again, every day one chapter will be finished, sir, in this series. Advanced tax 1 day, assessment 1 day, search 1 day, appeals 1 day. So in 4 days, we'll complete here another 4 chapters. So by then we'll complete 5.5 questions. Okay, then in the last 5-6 days, sir, to the extent possible, we'll complete what? Business restructuring and NR taxation. By that, we are going to cover 6.5 questions. Okay, as I said, sir, trust, I'm going to give you the recorded classes only. Okay, I mean, the regular class only. But still, even in regular class also, sir, I had taken trust little faster only because that I took towards the end. So it will be completed within 6-7 hours only. So you can even watch that. If you are face-to-face student, they'll play it here. Okay. Capital gains, I don't think we'll have time to cover capital gains separately. We'll straight away go into business restructuring and NR taxation only. But sir, out of miscellaneous chapters, even though if I didn't cover in a fast track, one chapter which you have to study in miscellaneous na TDS and TCS, sir. Actually, it is not there in our syllabus, but in TDS chapter there are amendments. It's okay. So go through the TDS, sir. Nothing TDS chapter doesn't require explanation at all. It's purely about there will be a section number. Under section number, which income will be covered? 5 columns kind of. Section number, which income, what is the rate of TDS, what is the limit when TDS has to be deducted and not deducted, then there will be exceptions kind of. There is nothing to be explained. It is you have to revise it multiple number of times only instead of you listening to the classes also, that you can do it on your own also. Sir, we get full access to books in BCCA app. You will not get access actually. Okay, so as we said already, when you order books from there, from now on, if you order books in BCCA app, it will take 7 days. When you order a course also, it will take 7 working days for you to reach the books. Okay, most of the cases will not keep soft copies in the BCCA app because we are not sure about the safety of BCCA app. It has been cracked previously. Okay, and classes, soft copies were leaked. And classes, the service provider said something like he has given some kind of technology, so it is not easily crackable. But still, PDFs we are not able to trust there. That's why we are not keeping soft copies. Even though soft copies are there, there'll be only view option. View option will be provided. I hope I answered all your questions. Okay. So from tomorrow onwards, sir, the classes will be in BCCA app. I mean, classes through BCCA app. So if you have already enrolled for classes, then you just log into your app. Once the class starts, you'll get a notification there. On that you click, you can see me. Okay. If you do not yet enroll now, then first you should enroll. Then you can able to see the course in your app. Then you can log in. Then you can join the class. Okay. Thank you all.